going to be discussing supply and demand. I'm going to preface this by saying I'm not an expert in supply and demand. I would probably say I'm not an expert at anything. Markets tend to evolve. I like to keep learning, keep evolving so that I can try and stay profitable. I find that if enough traders do a certain strategy, it makes no difference whether it makes sense or not. It'll work and it'll be significant. And so it's important to understand as many strategies as possible. The reason that supply and demand is important is because it helps you identify areas in the market in which there's going to be an increase or a likely increase in market participation. They can tend to be entry or exit points for positions, and they're areas that, for a variety of reasons, are going to uh, cause volume to increase. Now, you always want to use some form of confluence on any strategy, but supply and demand is something that tends to be misunderstood a lot in my mind. And part of that is because the trading world tends to just name things and not really understand them. But supply and demand is essentially based on an idea of imbalance and incomplete auctions. The price went to a level, and the players in the market that wanted to participate did not all get the opportunity to do so, right? And what that does is it leaves orders, it leaves desire for market participants to get in if price returns to that level. Uh, or at least that's the theory, right? When you look at this, is my E-mini chart on the higher time frame. When you look at these charts, on my charts at least, if you see a box versus a line, that means that it's a supply or demand level. And essentially, the first thing I look at is wicks. And when I first started charting out boxes like this, I was doing it because I knew there was a specific level that I wanted to mark on my chart, but I wasn't really sure where to put the line. So I use a line where there's a very specific level, and when the price goes to that level, there's a smaller margin of of variation in the price. I started doing supply and demand zones without knowing there were supply and demand zones because I would look at a chart and I would see a level like this blue chart, and I would say, okay, I want to have a line there, but I'm not really sure where it goes, right? I'm not really sure if it should be 39.23 or 3900. Now, this particular box has been there for a while, and I haven't changed it because I know that 3930 is a level, but really this should be moved up. And this was in place long before price came back up and then back down. But you can see it's very well respected. And what you see is when price gets to these levels, it causes a reaction. Now, when I first did it, right, when I'm looking at this level right here, we're talking about October, right? I would have drawn this back in September, and this was a supply zone, right? As price came up, it struggled to get past it because there's a lot of people in there that wanted to enter short. A lot of times, once price goes up and gets through, I will delete these levels. However, in this situation, you can see the price stopped, and then it caused a reaction, and then it caused a reaction, and then it caused a reaction. And when that happens, I leave it. Now, you can pretty much see that price stalls at this level every time it's gone through it, so I leave it. If price just were to have just blown through this level, I would have probably deleted the box. Um, this purple level was on there well before we came up and broke above this blue level. But you can see it's much shorter, it's much smaller than this one, but it behaved very well. When price got to that point, there was orders there, there was active aggression from sellers to enter the market. And that's what you expect. If you have your level marked out correctly, then that's what you would expect. If it's wrong, it's wrong, right? Like sometimes you're going to draw these and they're going to be incorrect, and so you just kind of delete it. Practice, 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 and watch it. So let's take a look and see what are we looking for, right? You can do supply and demand levels at any time frame. You'll hear people say there's a 4-hour supply or a 1-hour supply. That means that they're looking at the 1-hour chart or the 4-hour chart, and essentially the higher the time frame, the stronger the level. You don't want to look at a 4-hour supply on a weekly chart, but if you're trading off of a 4-hour chart and you have a 4-hour supply, then I would use that level for the week. For me, I'm using it more so on higher time frames. 4 hours would be the lowest I would go, but really I'm looking at the daily, right? So right now, when you see wicks like this, it's indicative that price moved very fast. There's incomplete auctions. If you have a footprint chart, you can actually see the imbalance. You can see the incomplete auction. You can see that there was market participants that uh, just didn't get a chance to play. On a TPO chart, you would see single prints or tails, and those things indicate that the market moved fast, and that if price were to return to that level, there's a likelihood that buyers are still waiting here to jump in. When you look at wicks, you look at a combination of wicks, right? So right here, this would have been something that I drew to say, okay, we came down, we bounced. If price comes back to this level, I expect there to be a reaction there, and there was, right? When price came back, there was a reaction. So how did I get this level? Well, obviously I marked out this daily level right here because we had two candle touches, and so I know that 38.56 would be a significant level if we went back to it, and it turned out to not really be that significant. So I don't put a whole lot of value on that level moving forward. But what I did see was every time price came below 39.24, buyers stepped in aggressively to bring price back up. And so it's a little bit of an art form, but you can see I went from this wick right here on this bar to basically the close of this bar as my level. And then you can see when we did finally return, I was pretty close. Maybe not precise, but I was pretty close on that level. And then in this situation, it gapped down, and you would have wanted to be short there. But this was an opportunity for the market to pivot, and it failed. Once that happens, you need to get on the train, right? This is indicating that buyers are shot, they don't have the strength, and once this move happens, you want to get on that. You want to get on that move. Um, Again, I didn't delete it because the level got a reaction moving forward. Uh, so that's what you're looking for. You're looking for uh, a combination of wicks, a range of level instead of an exact point, and an indication that the market has unfinished business and a likelihood that market participants are going to jump in when price returns to that level. If you watch these things on a footprint chart, or you start to add uh, a uh, volume indicator, right? Hour. You start to see that price didn't spend a whole lot of time there, right? There wasn't a ton. There wasn't a ton of volume at these levels, right? Why? Because price moves out of it so fast that players or market participants don't have time to get in and out and dilly-dally around. There's an aggression to the move out of the level, and therefore there's not a lot of volume transacted. There's not a lot of back and forth. It's fast. So that's what you're looking for. You're looking for an indication of an imbalance, an incomplete auction, and a likelihood that market participants did not get a chance to participate when the price got there, and so they're likely to still be there waiting to participate if price were to return. Um, Try marking out some levels, post them in the comments below, and I'll give you my input and what I think. Uh, Join the Discord. There's free membership. It's kind of silly not to do it. We get free bonuses from time to time. If you join the premium, you get $1,350 in free volume bonuses. It's $10 a week to join the premium. You get $1,350 in bonuses. So if you can't make $10 off of over $1,000 of margin, I mean, you could literally just throw darts at the wall with these and make $10 a week. So it really is a great community. It's a great value. I highly encourage it. Uh, all of these strategies work on crypto, Forex, commodities, indices. You can trade all of that on BingX. Uh, I'll post the links in the description, and show me your charts.